Hello, everyone, and welcome to the latest edition of Conversations with a Pro Trader. I'm your host, Greta Wall, and with me today is Christian Tharp. Thanks so much for joining me for this today, Christian.
Absolutely. Thanks for having me.
All right, so as a new guest here on this program, I'd just like you first to introduce yourself for the audience. Tell us, how you got into trading, how long you've been trading, kind of the Cliff Notes version of your career as a trader.
Wow. Yeah, big question. I guess you go back in the day. I don't want to age myself, but you go back in the day, and it became very clear to me early on in my professional career that maybe I wasn't meant, or maybe I didn't thrive working for others. And
Mm-hmm.
I decided to try to go it alone so at first I went into real estate. So I have my real estate's license. I'm a licensee, a realtor of 25 years, only because I wanted to get into real estate investment. So I got into the real estate, and then to get better with investment properties, I decided to get into home improvement sales. So learning to sell siding, windows, roofing, so that I could learn more about the construction process.
Mm-hmm.
Uh, Only took me about a year or two, but before I thought to myself, I think I could run this business myself. So I started my own home improvement business.
Wow.
So coming to the early 2000s, I had a business, I had real estate. It only made sense to me to move into the market. And I decided to start dabbling, getting involved. And I was fortunate enough to, let's just say I took the lumps that everybody takes, but I was fortunate enough to start kind of getting the gist of it, relatively well in a few years. And next thing I decided to do was start trying to rub shoulders with other traders, one in particular that I had seen on TV, named Adam Mesh.
Mm-hmm.
And I just happened to call him up right when he was starting a coaching program. That was 16 years ago.
Wow.
And and then that's kind of all she wrote. Next thing I know, I've coached 5,000 students on stocks and options, became a CMT. And that kind of what really it was the desire to kind of meet the trifecta that got me into trading. And I was fortunate enough. Adam was very pure in price and risk and things of that nature. He was not very adept to heavy technicals, which I was. And so I was able to help him. And the thing that I always tell the students I work with, they look for information from a trader's perspective, like trading.
Mm-hmm.
And when I teach them and they learn and all these things they pick up, I always remind them, well, the number one way I'm able to help you isn't really my experience as a trader as much as my experience as a coach, being fortunate enough to work with individuals, because they teach you a lot. They teach you certain things that you're not thinking about as a trader, but you do instinctively. And
Mm-hmm.
it kind of flushes it out. And so here we are now, coach, CMT, trader, the whole thing.
Mm-hmm.
So
Great. Okay. So just for everyone who's here with us live, again, thank you for joining. I have put a comment in the live chat on LinkedIn. So just so everyone can see where that is, go ahead and submit your questions for Christian there as they come up. The first half of this event will be a conversation between Christian and myself, but we definitely want to be answering the questions that you guys have about the market, trading, anything related to trading. So submit those as they come up, and I will be sure to ask him all of those before the end of this event. Okay, so Christian, lots of experience in the market. You said about 16 years at this point since you've been with Adam Mesh.
yeah, no longer with Adamesh, but since I started with him,
Well, since you
yes,
started, yeah.
16 exactly. And I started trading, I think it was, well, let's go 5 or 6 years before that.
Okay, so we'll say 20, 21 years
Yeah, we'll
trading.
round it
That's
to
great.
2 decades.
Okay, so I'm sure it's changed over the years, but describe your personal trading style at this point in your career.
Well, I've been asked that a few times, and I have I always like to say, well, let me put it this way. I have and I'll elaborate. I have a trade service called VelociTrader, which is combining volatility with trader. So,
Mm-hmm.
the idea of playing on Velociraptor, my style
Mm-hmm.
is I like things that are volatile. I look for stocks that move. But I have somewhat of a unique style, probably unique. And this is what I hear from members and students I work with that, um, I really keep things to the simple and the basics. And
Mm-hmm.
there's reasons for that, and there's a power in that. There was a quote I remember reading at some point that something along the lines of, any darn fool can make things complicated, but it takes a genius to keep them simple.
Mm.
And so it is very difficult, and especially in the world of trading, because nowadays we have our software programs, our platforms, everybody has their indicators and all that. And my understanding is statistically that has not helped people in the public make any more money. It just gives them more access. So
Mm.
my approach to trading is very much, look, there's a reason why sayings price is king. That exists for
Yeah.
a reason. Nobody
Hmm.
ever said Bollinger Bands are king, right? So and moving averages and momentum indicators, well, what is making them do what they do? Price. So I like to really bring it down to that much of a level and prove to everyone that there's a reason why investors and traders were making money 100 years ago. They just looked at the most important indicator there is, price. So I like to really hone in on those core pillars. Price, to me, everything revolves around risk and reward, or as I like to tell my students, just math, right? You know,
Hmm.
those 7 indicators you've been duped into believing you need to be using. I've got the trump card to all that, which is math. If you're
Hmm.
risking a little to make a lot, you're probably winning, right?
Hmm.
Regardless of what method or setups you're using. If you're risking a lot to make a little, you're probably losing. So when you
Hmm.
put that together, put that all together, and you say to yourself, well, we want to keep those losses small and those winners big. Volatility helps me do that. When we're wrong, we keep those losses to a smaller point. When we're right, that volatility gives us those big gains. So
Hmm.
um, the only other thing I would add, it blows people's mind that the members that I work with, that up until recently when we did a merger, I was operating 6 options trading trade alert services. Every one of them profitable and successful. At no time do I ever look at a Greek, you know.
Hmm.
And how do we pull that off? Again, it's going to sound crazy, but math, right? Just find setups to give you good risk reward, and it's kind of a breath of fresh air and
Hmm.
somewhat unique. And that is the approach that I've decided to employ. Ironically, what's expected of me as a CMT is that I'm going to blow your mind with all these indicators and
Hmm.
software programs and screens. And the reality is, no, actually, think of it like golf. You know,
Hmm.
if you'd like, I can get you, 12 different clubs in your bag and a cool utility club and, some new putters, and we can have all these tools and everything. But is it going to help you if you can't connect with the ball, hit it straight, chip and putt? So I focus on those basics so we can have that kind of successful trading experience.
Hmm. For your own personal trading, you focus mostly on options over equities, correct?
Mostly, yes, that is correct.
What made you just throughout your career, want to focus in the options market versus trading just straight stocks?
Definitely the flexibility, the
Mm-hmm.
leverage. Options, obviously, as most anyone watching this that's traded them know, can give you some great gains.
Mm-hmm.
We've notched we had a 300% and a 600% this week. Very difficult to get that, trading
Mm-hmm.
just an equity. But I do think there's definitely a time and a place for equities as well. So I think the flexibility, the ability to be on both sides of the market easily, the leverage,
Mm-hmm.
a lot of neat things you can do.
Yeah. Okay, great. So, you mentioned you are a CMT. So, on top of being a full-time trader, you're a chartered market technician as well. What made you want to get that designation? And what do you think, what type of edge, rather, do you think that gives you in your trading?
Sure. Yeah, great question, especially the first part. Why did I do it? That's a good question. At the time, I was very, very passionate about learning technicals.
Mm.
And I was also coaching at that point. And so I felt as if when I looked at the curriculum, there were areas that when someone asked me, when I'm working with members or students, they ask me that type of question, I would say, well, the interesting thing is where I learned the most about trading has nothing to do with technicals as much as it does market psychology and behavioral finance and why we do the things that we do. I think anyone
Mm-hmm.
that's been in the markets any period of time knows that at the end of the day, the crown jewel and nucleus of all successful trading is controlling emotion, psychology, discipline. And so when I saw that on the curriculum, in addition to learning some of the different technicals and learning more about them, I thought, wow, that's interesting. The mindset of
Mm-hmm.
why we fail and why we succeed. So that kind of drew me to it.
Hmm.
And then obviously being a coach, I felt like it was important for future students to know that this guy has put in the work. I don't want to knocking, but there's a lot of people that can open a Twitter account or a YouTube channel and claim a lot of things,
Yeah,
right?
yeah.
That maybe have never made a trade in their life, have no credentials whatsoever other than maybe some photoshopped results.
Hmm.
For me back then, it was important for students to know that this is someone that's actually an accredited, certified to do what he does. He's been tested and somewhat of an expert in the field. So those are the two things that really kind of I thought were important to draw me to it, or what drew me to it. As far as how it helps me, I do think there's that deeper understanding. It's not what anyone would think, you know.
Hmm.
How it helps me. Anybody can go learn what a hammer candle looks like.
Hmm.
Anybody can slap up a 10-day moving average and trade off of it, right? Anybody can do these things, yet
Hmm.
90+% of the public loses, right? It's the deeper understanding, as I mentioned before. Well, Mrs. or Mr. or Mrs. Student, you know what a MACD is, but do you know what it means and what it doesn't mean? What
Hmm.
is it telling you? Why isn't it telling you the other thing? So that, and then of course, when you look at that emotion, when you look at that psychology, knowing that when I put on a trade in a trade alert service where 1,000 members might put that trade on, if
Hmm.
you think it's hard to control emotion and things making your trades, imagine if you're controlling trades for thousands of others. And so that experience and knowledge really helps when you're kind of in the trenches making the trades week to week.
Great. Okay. So let's get into your current trading. This is the question I ask every trader who comes on this program, and that's how would you grade your week of trading so far? So we're over halfway done, end of Wednesday. So on your typical school grading scale, an A to an F, what would be your grade and why?
Right now, I'd say that's a really good question too. I'm gonna go we're right at a B plus, dangerously close to an A.
Okay.
So again, my trading style and methodology, very, very unique is what I understand and what I've come to know. I refer to it as the start of the week, to use your question, to the end of the week.
Mm-hmm.
I refer to it as a chess match, and I encourage my members and students to think of it as there are several pieces on the board, and you have to think several moves ahead. And we're
Mm-hmm.
not worried about what's happening today with one trade. We're thinking about what's happening over the next 5 days with all trades and all the different variables involved. And so the reason why I say that is because we're having a really good week so far, but we have 2 days to go. But if it ended right here and now, then we had an A plus of a week. It's been a pretty good week.
Hmm.
We do have other trades going, with these trades and everything, and but it's looking pretty good. So I'm pretty optimistic, especially looking at some after hours. We have some puts on a net and just saw some pretty good reaction after hours.
Mm-hmm.
So that might be the icing on the cake of our week.
Okay, great. So let's talk about the news of the week. Stocks, as we saw yesterday, huge gap up after that positive inflation data, CPI report coming in lighter than expected. That was good news for the market. How do you find setups after a big move higher, like the one we saw yesterday? What's your strategy that you use for trading on a big day like that?
Sure, absolutely. And that one's tough because I know
Mm-hmm.
that one of the things that we comment with members that quote they're paying me for is to keep emotion in check.
Mm-hmm.
Not to, you may have heard the phrase, that first hour, suckers hour, amateur hour,
Mm-hmm.
right? So trying to help them not be that amateur or sucker. So when you see a big move like that, you're obviously very emotional. Oh my gosh, I got to get in, or oh my gosh, I'm gonna try to buy puts and catch a fall. And you just kind of make those. So numero uno once is looking at that kind of a day is irrelevant. The mere fact that it's up big or
Hmm.
down big by itself, not relevant. What I want to do is
Okay.
put that day in context. So a phrase I use is, are we breaking things, right? Are the
Mm-hmm.
things getting broken? Is there a major level up, a major level down? Is it the beginning of a move or the end of a move? Obviously, prior to yesterday, market's already up, right? 300 S&P
Mm-hmm.
points. We got to put it in context.
Mm-hmm.
I tend to not be super excited on days like yesterday after the previous 2 weeks, where now we're talking about being up 400 points, from the 4,100 low to now 45, 44, 4,500 yesterday. And I say to myself, well, on one hand, does this sound like, and I tell everybody, just back of the napkin, does that sound like the most opportune time to buy after a 400-point rally,
Yeah.
after straight up in the air? Is that the most ideal? Markets can, as they say, stay irrational longer than you can stay solvent. But does that sound like the best time? Oh, so buy puts. Well, hold on. Do we really want to, do we really want to jump in front of that train? Right. So
Right.
I look at stuff like that and I say, well, let's just sit back here and let's think about this. And typically, what I will end up doing if I want to put a trade on in those environments, a lot of times it's some sort of a strangle type approach
Mm.
where, all right, we're going to accept the reality of this move and we're going to find the setups that make the most sense. So are we breaking things? That applies to stocks as well. Are we breaking some levels? We got Netflix breaking 450 today. Are we breaking things? We like the move, but we don't want egg on our face tomorrow. Let's hedge it with maybe some out of the money puts or something. So that's a more common strategy that we will employ rather than take a side on a day like yesterday.
Hmm. All right, so the market rally extended even further today. So we're,
Mhm.
we're on that 2 week kind of just push higher, 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 higher. That, of course, came after more positive inflation data this morning as well. When you're looking at the technicals of the market, what's been broken, the higher highs and higher lows and all of that stuff. How long, as a technician, would you expect this to last?
I'll break that into two parts for you.
Okay.
Short term, directly in front of us, and then overall.
Mm-hmm.
We've been forecasting this move. I would say we've been forecasting the last 250 points S&P move. We've been forecasting that for a while. The
Mm-hmm.
setup is clearly there. It's very textbook. And again, didn't need any complicated indicators to figure that out. Price was telling us that. And sure enough, we've done that. Once we kind of confirmed the break, what that did for us is that told us that um, the market reserves the right to change its mind, as I like to say. But right now, its mind is saying we're testing our all-time highs here soon,
Mm-hmm.
probably taking them out.
Mm.
Specifically, when I look at the Nasdaq, I like to look at the NDX a lot in the S&P. So that's what it's
Yeah.
telling me overall. In the short term, when you start going straight up in the air, like we kind of have been. Last Thursday, we had a drop outside of that. I've been reminding everybody all week that if you go back to June and July, we
Mm-hmm.
used several different breadth, sentiment, momentum type metrics to tell us we were running out of gas as the S&P was pushing up to 4,600. And one of the things that made the rounds was the fact that I think the Dow was up 13 straight days in a row.
Mm-hmm.
And I believe that was only the fourth time in history that had happened. And so, in the moment at the time, kind of like right now, in the moment at the time, look how bullish we are. Look how this is awesome. We got to be buying. My response to that was, this is one of the most bearish things I've ever seen in my life, so to speak.
Mm.
In other words, let's think about this. Okay. Again, back of the napkin. In the entire history of the Dow Jones Industrial Average, only 3 other times had we ever done that. In other words, what's the flip side? Every
Mm.
other rally in history, thousands of rallies in history, terminated before this one. Does that sound like now's the time to buy, or oh, we are now in the top 5 times to get out? So when I look at this environment, I say the same thing. Look, we could be making a beeline up to that 4,600 S&P. We could be making a beeline up to the NDX highs as well. But you
Mm-hmm.
want to be careful. This
Yeah.
thing is running. It's running hot, and markets don't typically send you an email letting you know right before they crash. So be careful.
Mm-hmm.
So I think short term we're due. Far be it for me to say that starts today, tomorrow, the next day, but we're exceptionally due for a pullback.
Mm-hmm.
Pan out a degree. It looks like we got more highs coming.
Hmm. All right, so earnings season is still going on. We're winding down in this Q on these Q3 results, but arguably the most important stock in the market has not yet reported. Nvidia is supposed to report next Tuesday after the market close. Do you see any setups on the stock ahead of that report, and how would you approach Nvidia after the company reports?
Absolutely. As a matter of fact, yes, we've already started talking about NVIDIA.
Mm-hmm.
There's a great setup. It's one of the ones I thought we could talk about today because it is showing a pretty good setup.
Okay, great.
When I look at NVIDIA and I look at the semis space, again, one of the things we have been analyzing a lot and waiting for, we look at the SMH, obviously the Van Eck semiconductors. We've been
Mm-hmm.
watching that, and it has been forecasting a break to this upside as well. And then it just crossed what we think is a pertinent marker on 160. So we look at that and it tells us that overall chips and semis should be heading higher for a while. We look at NVIDIA. We don't really see a realistic world here where SMH runs up what looks like could be as much as 50%, and NVIDIA doesn't go with it. So earnings or no earnings, we look at that and it says to me that big dog, in the fight there should be heading higher. There is a clear breakout point on NVIDIA. There's been a few levels we've been watching, 3 in particular. It held the first one a while back, just 3 weeks ago at 400. We were watching to see if 450 got taken out. It did. And then we were watching 475 get taken out. It did. And here we are knocking on the door of the big one, which is 500. And so that's kind of what we're watching to see take that thing out. And now we're projecting, you got to be thinking 600-700, no problem. 600 is your first target, I would think, if you take that out. But I would think much beyond that in all likelihood.
When looking back on this earnings season so far, the pattern has been any stocks that are rallying up into the earnings report, if they don't have an absolute blowout beat, it's kind of been a tepid response from the market. Like, oh, you just didn't do enough. We've given you kind of enough leading up into this. NVIDIA is obviously, the stock was down today, but the overall pattern heading into this report is higher. Do you expect the same kind of market reaction if they just don't do quite enough?
I tell you what, that is a great question. And I know that, after 16 years of working with students and members, everyone wants to figure out how that earnings is going to go, because obviously there could be a huge, so I'll be honest. I mean, I do encourage, we do look at earnings and how we could possibly play them. I'll be the first to admit there's things that, I consider myself to be very, very good at or my strengths. There's things that I'll just say not had as much success with, and trying to figure out how an earnings reaction is going to go is one of them. And so, but I do know that one of the things that I point out when I see it, similar to what you mentioned, is what I have noticed is commonly if a stock has broken something leading into the earnings, a lot of times that's a sign of market sentiment. What's like, look, we're going higher, or let's say we broke support. Look, we're going lower. I want to say it was Tesla that broke down right before its earning. Perfect. And again, not the act of simply being down, the act of breaking something on the way down, saying, look, we're not even going to hold this area. We're out of here. Kind of give us an idea what the market thinks. So when I see things like that, I'm like, look, if I had to bet, I would go with that. NVIDIA is sitting right there in between those two levels, this kind of 500, 475, 480 area. If I had to guesstimate everything, seeing what I'm seeing, it seems to me that odds are favoring an upside move. And I think what you mentioned might even add credence to that, the idea that we're pulling back first, right? So there isn't this whole buy on the rumor, sell on the news as much. We gave up 15 points at one point today, I think from the high, that is, from the 500 high.
Yeah. All right, great. So we'll see next Tuesday. That's a big one to be watching. Okay. So you mentioned, we talked a little bit about the setup for NVIDIA, but let's talk about your top 3 setups overall for your trading. So what are those? I know you have some charts ready to show us what those are and how you use them. So let's go ahead and do that.
Sure. Yeah. I'll go ahead and switch on over here. And now real quick, I know a lot of times, some people see my screen at first, obviously the black background and the blue bars and things like that. I'll save your time as to why, but believe it or not, there's reasons for it. So my point is, hopefully it's visually, it's good for everyone to see here. But there's a couple setups that I'm watching, and so I thought about today. Well, do we talk about things that have happened or things that we're watching to happen? So, for example, a stock that we had been watching was Netflix, and you can kind of see this red line here. So when I'm coaching, look at the red line, look at the green. Well, notice all this 450 that we see, all this 450, all this 450. You see this really break. So to us, and so today we get this nice breakout. This is what we want to see for higher prices. So on one hand, it's a setup, but it confirmed for us today, this breakthrough. And what could this mean? Well, let's look at comparable setups. Now is one that we've been watching. Look at that 600, took it out, up and away we have went. Broadcom, speaking of those in the semi space, we have been watching this 925. Once we took it out, up we've been going, so forth and so on. So notice how, first off, I stick with just price, and I try to find these key levels, as I call it, these important prices, or these patterns and these setups. So with that in mind, we're keeping an eye on MongoDB, MDB, right? And again, if you follow across my line here, you're going to notice quite commonly this stock runs into problems at 400. Okay, today and yesterday running into a problem at 400, as we might expect. Just like if we can break through it, we would expect this to run higher. Obviously, a lot of potential resistance in this area, but when we put it against the backdrop of the overall market, we think this probably takes out its highs, no different than some of the other names we've looked at. Again, LRCX is another one. Nice wedge formation, took it out. Sure, there's a lot of resistances along the way, but these are major breakouts, similar to Apple. Apple's break out of this declining wedge, which is bullish, right? So, I mean, Apple had been telling us. Let's go back to what you had mentioned. Here's the big one that we're kind of watching, and the levels we've been watching here, and I'll narrow it down for everyone. Again, we just look for these very easy price points, and most stocks don't provide us that, which is why I want to go look for them. I want to find the things where what tends to happen is we tend to, one, we're kind of marketed to believe that I've got to be using one of these, 8,000 indicators over here to succeed. I always like to prove that no, you don't. As a matter of fact, the simpler you keep it, the better you will tend to do. But in order to do that, we have to find price points that tell us what to do. And so here's the 400 level. Here's the reversal off of it. NVIDIA made it very clear that me, at least NVIDIA, I plan on moving higher, right? Nice reversal off of support, and there you have it. We watched 450. That was our first breakthrough point. And then you'll see the zone here in green where we've had a common problem getting through. The last time we did it, the last two times we got to 500. Well, once we pushed through at the end of last week, easy target was 500. You'll see right there today, yesterday, hitting it and pulling back. So this is probably the biggest setup we're watching. We want to see NVIDIA take this 500 out, and our very first target would be 600 on that. Probably our favorite, this and Netflix. Again, depending on what we mean by setups, Netflix has already taken out that 450 level we were watching. So we love that to move higher. Now we're watching NVIDIA here. Can you take out this level as well? We're also watching, in the similar vein, United Rentals. Okay. We've traded this off and on, so we keep an eye on these different names. But this was a stock that, again, when you look at price patterns, you understand price, you're going to notice they're more powerful than any other indicator that there is, but you got to be looking and kind of keeping your eyes open, so to speak. This is somewhat of what this inverse head and shoulders pattern that we might look at in this reversal. We want confirmation. This has also led to the best trade we've had this week. Friday broke through. We targeted 470, first level up. That's the green line. Next level up, the 492. That is our next. Yesterday, we took out the 470, came down and got a little bounce on it today, just like we'd expect that roll reversal. This pattern here implied that we should run to no less than 492, but we should be taking it out. So this setup here, you're going to notice hit multiple times. We take that thing out. This thing could be running who knows how far, but we're definitely targeting things like in the high sixes to 7 here. So these were the three setups just right after I got off a call, webinar before, that we're watching. We looked at and if anyone wants to see, just again, Tesla's one of my favorites just because it's been so good. It's showing us so many things over the last couple of years. And when you look at setups, this is a one that we want to watch, and I'll kind of narrow it down to an area right through here. And I always like to highlight so it's easier to see, okay? But, the power of price, I like to say. Nice, easy, trend line support. You break, probably going lower. Yep. You form a bearish rising wedge, confirm, probably going lower. Yep. Bear flag, probably going lower. Yep. Inverse head and shoulders, confirm, probably going higher. Yep. So forth and so on. Okay, we were following this channel as we moved higher and higher. Broke out of it, probably going lower. Yep, so forth and so on. Regaining 240. Again, not quite a setup, but we took it out. Now we are watching this. If we pan back out to the big level, we've been kind of waiting. It looks like it was trying to do it going into its earnings. Look at the dotted red line running through. Okay. And I like anyone that has either one skipped the whole price thing because, I got to get a software program. Just always remember that it's not me drawing these lines. The market is doing it. I just add the color is all I'm doing. So Tesla gets to this red line, seems to have a problem, seems to have a problem, seems to have a problem, seems to have a problem. Well, we're seeing Tesla make this turn can we get back inside this green channel? But more importantly, do we take out this trend line here? If so, we love a target back up to these highs, as everyone can see, right around the 310 to 315 area. So this one might not happen today, tomorrow, but we're really watching. If this market takes off like we think it's trying to tell us it wants to, then we would expect Tesla to get up here. Right now, this area is in the 265-ish zone. But when you look at that little inverse head and shoulders, we saw something similar in a less known semi name, Wolf, right? Wolf, nasty little sell-off. Look at this cute little inverse head and shoulders confirming today. Nice little push through 36. Again, set up in that we have broken through, just like Netflix. We pull back to these, great opportunity for a re-entry. If they take off without you, great. Then you can watch NVIDIA for 500, MDB for 400, URI for 392.
Great. This is great. I know that, just personally, I know that one of your strategies you use are what you call lotto plays. Those are those 0 days to expiration options. Talk about how you use those in your trading and why you like to focus on those types of options versus, longer expiration dates.
Sure. So I would, I guess, clarify and or specify that I wouldn't say it's like I wouldn't call it the focus.
Right. It's just something I know you do use.
Yeah, definitely. It's dare I say it's fun, but it's one of those things that typically don't get too crazy with that strategy unless we're having a good week, right? Mm-hmm. So think of it as, hey, you've had a good day at the blackjack table, and on the way out, sure, I'm going to throw a couple bucks on red. But I like to take it to next, kind of like a next level. We don't ever put on lotto plays that we don't have reason to believe that can work out. So we don't want to guess. We don't literally want to gamble, but we want to say the environment is right for this big thing to happen. And when we put these trades on, we're looking for something that bare minimum 500% type gain. But if everything goes well, 1,000% or more. As a matter of fact, we actually put one on today, and typically we wait till Thursdays, but I saw it today and I just loved it. But it's one of those things that we think about managing risk, and we think about stops, and we think of that nature. What I always like to do is to get my students to kind of reframe what they think about risk, because a lot of times, a lot of the trades that we put on, when you're dealing with highly volatile stocks, and we're dealing in live trading rooms on Wednesday, Thursday in particular, or same week type trades, you run a high risk of a wipeout, right? It's just going to happen. If you want to play games with an NVIDIA, then you might wake up tomorrow down $10, $15, and whoops, there it goes. So what I try to get students to remember, or members to remember, is that, but that doesn't necessarily mean you're not managing risk. Just because you're keeping your options, let's say, because I am directional most of the time, calls or puts. So not as much a big fan on some of the more complex strategies. I like to really open the door, and that's where that volatility helps. So we can get these huge gains, or as I like to say, big gains solve a lot of problems. Okay. So when we look at that management of risk, I worked with this one guy that told me that, I should keep my losses to 25 or 50% in my trades. Okay. That's probably exactly what you should do for his strategy. But if you're asking, is one managing risk better than the other, I would challenge the idea that capping your loss at, say, 25% is managing risk, or even 50% for that nature. And an example of what I mean by that is, okay, so let's say you are capping your call, your long option plays at 50%. Great. I'm getting wiped out in the bulk of mine. Great. On the surface, that may sound like I'm not managing risk very well, but let's rethink that. What if your winners are only 25% and my winners are 200%? Who's managing risk better? I'm risking 1 to make 2 in my trades. You're risking 2 to make 1. But you kept your loss small. So there's other variables involved. Yeah, but I don't want to lose more than X. You don't want to lose more than what? 50% of the amount you're putting in trades? Great. How much is that? $500. Awesome. And in the trades that I recommend, just make the whole trade $500. Ta-da, problem solved, and you're risking the same absolute amount as well. So when we think about that, when we talk about lottos, we want to take all these things and make sure that, one, that we're not betting the house on them. Typically when I put these on, either it's just such a great opportunity that I love them, or hey, we've had a great week. Let's see if there's something good out there. So what do I mean by something good? What I mean is, because I want to make it clear, we're not talking about guessing, gambling, or any of that stuff. We're talking about well-informed, educated trading decisions. So take, for example, this is the XOP. All right. And oil looking terrible. Energy, it's probably my least favorite sector right now. If oil doesn't hold 75, I think you got much further down to go. It's where it bounced earlier this week. So having a rough day today. And then, again, notice how just good old price, very important level right up here around 143. We've traded this before due to breakdowns of 143 and breaks back above 143. Notice what we did today. Doink, right up to 143, like it knew that green line was there. Okay. Gave us one heck of a beautiful textbook candle reversal, sends a very clear message. Odds are ripe for me to fall. Well, where would I expect to fall? Well, these major levels that we isolate are also, they tend to act as magnets or self-fulfilling prophecies. Just like when we broke below 143, where did we fall? Right down to here, 135. What about the other time? Right down. So where would we expect to act as the magnet? 135. Today, we were kicking around the idea of the 136s were only a dime, those puts, right? You make it all the way down there, you're making a minimum 900%. If you get there quickly enough, it's even more. The 138s were a quarter, right? So it's something where we look for, hey, this could really happen. Could this, is the environment ripe for the XOP to fall $5 and change between now and Friday? Well, the last time it sure did. Why not now? So I just think they're great ways. It's something to add. I don't know that I would say you want this to be your strategy, but hey, if you're a great swing trader or a long-term trader and you're having a good week and you're looking to make a few extra bucks with some big winners and spice things up a little bit, these lotto trades can really not only bring the big winners, but they can add a little bit of excitement at the end of the week, as long as we're checking all the other boxes, managing risk. I tell every time I put one of these on, I say, look, don't use mortgage money. Don't use rent money for these kind of things.
Yeah.
Because if something happens in the Middle East, oil jumps $10 tomorrow, this is going to jump and you're going to lose your dime just like that.
All right. Okay, great. Let's go ahead and pull down your screen for now. We do have an audience question to answer. All right. So Eddie said, first, that he loves your Thinkorswim setup. He said, thanks. I noticed you are also working on the options trading strategy. This is a long one, so hold with me here. And mentioned some some gammas, or some alpha. My God. Some Greeks.
Yes.
Which you don't necessarily use, so we'll see. So he said, do you find it more successful trading with heavy, high delta structure for directional play or high probability for premium selling? He said, I find the volatility prior to the CPI report was incredibly low. The 3 sigma move completely squeezed up on the call side post the event, which induced a huge gamma squeeze for most of the call riders on the upside, including me. The question is, how do you hedge or manage the gamma risk when the trade is working against your spreads?
Well, this would be an easy answer. I would say I don't do any of the above. So as we mentioned before,
right.
As any, and I am going to bet anything, Eddie's very familiar with the world of options, but anybody that's familiar with the world of options to any extent, even, been, a year or two, has probably figured out there are a million ways to skin the cat in the options market. Okay. And there's an approach and a style for everyone. And I never want to make it sound like anything that Eddie just asked and everything that's included in his trading is irrelevant, doesn't matter. Everything has value to someone, right? So I don't use VWAP. Some people love it. Okay. Some love point and figure, though, also just X's and O's. So there, there's a cup of tea for everyone. What I try to do I lean on technical analysis and risk reward for my options trading. So think of it this way. At the end of the day, if let's say we had bought those 36 puts on XOP and they were a dime, and XOP falls to 35 tomorrow or Friday, we are closing that out for a minimum of $1 for 900%. There is nothing in the Greeks world that changes that. There's nothing
Right.
that I would have saw that would change that. There's nothing that matters to what I do in that regard. That's not to say that it doesn't matter to someone else. So for me, I don't look at any of that. To be quite blunt, I don't care, because what I do doesn't depend on it, nor does it matter.
Mm-hmm.
Doesn't mean it wouldn't matter to someone else. When you look at events like this, I understand. We don't do a lot of selling of options either. Again, I'm pretty much straight long puts, straight
Mm-hmm.
long calls. Even the
Mm-hmm.
strangles, that's all they are.
Yeah.
Okay, so we're really trying to capitalize on these big types of moves. I would say, unfortunately, I don't do or would do any of that. I look at something and say, hey, look, NVIDIA breaks through 500. Let's say it pulls back to 500 and I want to buy calls. Let's say those 525s going out X amount of time are $10 and I'm targeting 600. At the end of the day, I'm risking 10 to make $65. If that gets to
Mm-hmm.
600, I'm making that 650%. Nothing in the world of Greeks changes that, nor mattered in what I am doing, which isn't to say it wouldn't do anything else. So I lean very heavily on doing my chart work and then picking options and time frames that allow me to make sure that the thing, my magic bullet is, if I'm always risking one to make two, three, five, 10,
Mm-hmm.
right? You're putting odds in your favor. Greeks don't necessarily do that, right? Just like charting doesn't necessarily do that. No indicator does that. What ultimately gets you where you want to go, the one thing that will, without a doubt, no matter how bad you might be at trading, if you are constantly risking one to make five, right? You don't need to be right more than 15% of the time. You can blindly close your eyes like that monkey 20 years ago and be right half the time. So I really like to use, that those as the power for what I do.
Great. Are you buying mostly in the money or out of the money options in your trading?
Almost always out of the money. Almost.
Mm-hmm.
We'll go at the money sometimes. It really depends on time we have left in the trade.
Mm-hmm.
Um, are we early, late to the? Do we feel like we're early, late? Like right now, I think would have to look at the market and say, "Well, I might be late to these longs." Okay,
Yeah.
and we look at confidence level. What we're doing. Also, circling back to the whole chess match idea is, how are the other pieces on our board working? So
Mm-hmm.
if we've already locked some gains and we're doing great, then I might take some shots. If I want to increase the probability, right? Because the further we go out, the lower the probability of the trade. If I want to increase the probability on this trade because the other ones aren't working, then we might, kind of bring that in a little bit. But I would still say, as a general statement, out of the money.
Okay. So when you're looking at the market, we're in this big, huge run up higher. How would you describe the current sentiment and action?
Frothy,
Mm-hmm.
a little frothy here.
Yeah.
But that being said, again, if we forget about yesterday and we forget about that kind of big pop, you know, we look at what the market was doing in the week or so leading up, or even the months leading up. Nice
Mm-hmm.
bullish pattern, nice confirmation of that pattern.
Mm-hmm.
Seasonality is playing in our favor.
Yeah.
Everything looks like we are in a bullish environment, and we should expect to be moving higher for the weeks and or months or longer to come. Right here and now in that short term, again, you start talking about up 10% in short order here. I would say we need to cool off a little bit.
Mm-hmm.
So what we've been doing in our trading rooms and everything this week, we've been keeping it light. Certainly not fighting the tape, but we've been keeping it light and doing some light hedging as well, in case we wake up tomorrow and tomorrow's the day, right?
Yeah.
Tomorrow's the day that we're down 2% or something.
What big catalyst are you focused on before the end of this year?
I would say I'm not.
Okay.
I know one thing. I would say, I'm a huge fan. If you think back to the old turtle traders from the 80s,
Mm-hmm.
and how one of the requirements to become a turtle trader, if I remember correctly, was they had to block out all noise. They weren't
Mm-hmm.
allowed to watch the news, or read the news. They weren't allowed to do any of these things. They had to focus strictly on what the charts are telling them, what the buy, this is your buy, this is your sell, watch what's being. I am very much like that. So, for example, every the run of the mill average Joe on the street will look at yesterday's rally as because of CPI. I would say that rally was coming one way or another, and the market forecasted it weeks ago. So no different than when you look at the S&P running up into its high. I think I've got 17 different charts on my screen where everything from sentiment, breadth, even when we look at momentum here, where everything was saying we're about ready to fall, and it looks like something could be in the order of 7 to 10%. As we fell, of course, then there's all the narratives, and that's why we say narrative tends to follow price, right?
Mm.
So the narrative, when you look at price, the market was already saying that, look, we plan on, it looks as if right now we plan on breaking out and running to new highs. How we get there, call it what you'd like. So I don't really focus as much on it. I know things like I'm watching for gold to potentially break out, potentially, and what that may or may mean, especially if you're into inflation, yields, and all these kind of things. Um, Gold broke out of a pretty good channel that made it look like it was going to run back up to that 2080 area that it stalled at 3 times in the last
Mm-hmm.
3 years, I think. I'm watching that. Obviously, the fun little Santa rally at the end of the year. There's things of
Mm-hmm.
that that are kind of fun. But as far as catalysts, I'm kind of more of, I subscribe to the idea that everything that is known by the market. So
Mm.
what and the market is forward looking. So I'm
Right.
not really too concerned about what happens here. I'm worried about what the market is telling me now I should expect in there.
Great. Okay. Let's look back on the past week of your trading. We can go back to Monday, or you can even go back to, like last Wednesday. Talk about the best trade you've had and what made it go well. Kind of maybe walk us through the chart, what you saw heading into the trade, how you
Sure.
executed, and the strategy you used through it and why it worked.
Sure, you bet. And is everything up here on screen?
Yep.
Okay, so really take everything we've talked about today and just put it together. We talked about the stock, and I think I'm pretty sure this was our biggest trade of the week. Let's kind of narrow it down here a little bit. You can kind of see here my little green line right at 455. Okay,
Mm-hmm.
and we started talking about this trade last week. We've been talking about the setup for weeks, right? You can kind of see just running through here and just constantly running into problems at 455. On Friday, we actually closed above,
Mm-hmm.
right? So to us, that was a sign this stock is probably running higher. We are targeting no less than 470. That's pertinent because that's how we target things when it comes to um, profit objectives. So
Mm-hmm.
on Monday, we got the perfect little pullback. Okay, just like I knew that little green line was there. And since we had a target of 470 on this, the 470s at the time, I think we paid $2 for those. So
Mm-hmm.
we waited for the nice pullback. We bought them at 2. We were in great shape come Monday. Thought a little bit about CPI, but at the end of the day, the market is sending a message, and so is this stock. So we had the 470s, and it turns out we ended up getting a little bit of a Christmas present because of the gap higher. So
Yeah.
a little bit more than we expected because we had a sell limit. And so what I do with my alerts and when I put the trades on is I kind of like to give the sell limits ahead of time if I know what they are, so that members and students can go about their day if they're working. And at the time, we're trying to project that when the market opens. So I don't
Mm-hmm.
know if I have that over here. Yeah, I have it right here. So we're kind of looking yesterday what it looks like we're going to do. It looks like we're definitely going to open north of our 470. We're looking at 480. So we set a sell limit based on the options chain. It looks like we can get around $12. Turns out we got members got anywhere from 13 to 14 for that. I got 13. So we had a nice little 500 to 600% gain. We closed it out far exceeded. Again, we were targeting 470, not 480 at the open. So we got a nice little Christmas present, but that's been our biggest trade of the week so far.
Okay. And then on the flip side of that, we don't want to just talk about wins. We want to be realistic that not everything is a win. So talk about the worst trade you've had this week and what made it go wrong.
Sure. And I'm so glad you said that because there's nothing more obnoxious to me than people that only champion their cheerlead their winners, right?
Mm-hmm.
I always like to joke and say, well, that's the Twitter world. Here in the real world, we take losses and they're not
Yeah.
much fun. So, and I
Yeah.
think you can learn more from losses than you can from winners, to be quite honest.
Mm-hmm.
But so we haven't had any major losses or any kind of losses. What's tricky about that question for us, at least this week, is the
Mm-hmm.
fact that we do a lot of what we call like synthetic strangles and strangles if we're ever concerned. So when we went into knowing PPI was today, we ask ourselves, well, we like the long side, but let's hedge ourselves just in case we wake up to the market saying, we changed our mind about yesterday. So it's a little tricky here because we put on coming into today, we
Mm-hmm.
liked Netflix was not looking great. Okay, it went up and hit the 450, had put in kind of one of these indecisive, for those of you playing the candlestick version at home, doji type of days. And when you're
Mm-hmm.
doing it right at that resistance, we say to ourselves, Netflix could be looking to roll over here a little bit. It actually looked a little worse when we put the trade on, looking more like possibly, a shooting star type thing. It rallied towards the end. So what we did is we put puts on here. So I think everybody can draw the conclusion. Those didn't work out for us.
Right.
Okay. but we did have some Lulu calls on today, which popped up. And again, this is where we look at that chess match of what to do and when to do it. And
Mm-hmm.
so obviously we opened up to Netflix doing this. So on one hand, we lost 80% on these puts, but we
Mm-hmm.
turned around and we made a little over like 250, or we were up 250, 300% on these calls. So it's a little tricky because we didn't actually lose in the overall strategy. So it's kind of when I challenge my students. Well, we lost on Netflix. Did we though? Because one
Mm-hmm.
of these was always supposed to lose. That was a part of it. So if one of them does exactly what we'd expect it to do, it's not like we were wrong or that we lost. It's just we weren't sure which one. But yes, we did lose on that. Right now, we do have some other live trades that could turn into actual losses, and we'll kind of
Mm-hmm.
see how they go. But so far, we've had a pretty good week. We took some gains out on a net this week. We took some gains out on Apples. It moved higher. So we've been fortunate. It's been a fortunate week, a good week.
Okay, that's good. Great. Well, happy to have you here. It's been a good week. Go ahead and pull your screen down again as we're getting toward the end here. So I just want to know, I want you to tell me what stocks or sectors are you feeling bullish about right now and why?
Sure. So the why is going to be just because of what the market's telling
Right.
me. So I can
Yep.
go ahead and not bear the lead there. When I look at the performance, let's say we break it down and start from the top: the Russell, the S&P, the Dow, and then of course the Nasdaq. Clearly, the one kind of leading the way seems to be the Nasdaq and tech. So we're
Mm-hmm.
looking at things like. So then we break it down. And I say, well, let's look at the XLK. Let's look at the XLC with services and such. If you look, those two ETFs both hitting new highs.
Mm-hmm.
So we look at things and we say, look, the market is telling us in this environment we like this, and
Mm-hmm.
so when I see that, then I say, well, I like it too, right? So I don't really argue with it. So when you
Mm-hmm.
see those types of things, I would say, this is where. And if you look at the big pops, anybody that happened to look to the left, all these big pops are coming in that space. Most of it anyway this week. We
Mm-hmm.
did notice this week. Real estate seemed to be picking up some steam, but that could have to do with other factors. But bigger picture, tech, services. The downside, as I mentioned earlier, oil looks really rough here.
Mm-hmm.
And we're watching the 75 mark. We talked as oil was breaking down below the back into the 80s and below 80s. Like, look, our target is 75 here. If we don't hold that, and today did not help, I wouldn't think, help the bulls case of holding with rolling back over again and also seeing what some of these other ETFs are doing. If oil, I don't know that I would get bearish on oil here, but I would say if it fails to hold 75, then now we're talking back down to the 71 area, maybe even the 60s again.
Okay. Uh, for someone who maybe hasn't gotten into options trading before, but they're interested in the world of options. Uh, Personally, I think options give you a little more control over your risk. Your premium is paid. You know what you're going to lose versus just an indefinite loss when it comes to an equity. What would be your advice for someone who's brand new to options and sees it as something they want to add to their trading portfolio?
If you're talking about trading options, I would say be careful.
Mm-hmm.
Two, I would say do some self-discovery. Um, the trading that I do with options is not for everyone. I would say it's not for most. We
Mm-hmm.
take 600, as you said it yourself before I even answered. 600% gains are great, but how do you feel about 4 straight 100% losses?
Right.
Okay, in order to accomplish what we accomplish and pull off what we pull off, it's some wild rides on what we
Mm-hmm.
do. If that's not for you, then don't do. It's like when I'm coaching somebody on trying to figure out what their approach is going to be. I would say, well, let's make this very easy. If you have a 9 to 5 job, I wouldn't try to take on day trading, right? So
Right.
you want to kind of find what works and what suits you. And there's a
Mm-hmm.
lot of great option strategies out there for those that are more risk adverse. That psychologically, there's this kind of myth of percentage winners. Can't count the number of times I've been asked that. Well, what's your percentage winners? And I was like, respond, well, with who cares, right? What does that tell us? Just because you have a high win rate does not mean anything. I need more. Well, I need to know what's happening underneath that. When you look at, like, say, for example, those turtle traders, most of them had 30 and 40% type win rates, but they were making 100% or more a year trading equities, right? So it wasn't about win rate. It was about, well, that plus. So if you're somebody, but psychologically, it can be very exhausting, taxing, and draining to have weeks that are the opposite of the ones that we're having right now. And we have those weeks. If that's not for you, then don't try to do, quote, what I do. So think about, what do you like? And then I would recommend studying some strategies. What do you think of iron condors? What do you think of strategies like just selling some credit spreads? Do you have equities in your portfolio? Have you ever looked into covered calls? Is that more your speed? I would want to answer those questions first. What I've seen happen with students is they get into options and they get beaten up very badly. And sometimes it gets so bad that they're now at the whim of the market, and they're just getting knocked all around, and they're doing all these things that all these gurus told them to do. So I always say, well, do the self-discovery first. What is it that you want to do? What is it that you think you're good at? If you're not good with emotions, then my guess is you probably don't want to be trading lottos and doing the things that I do. Everyone believes they have ice in their veins until you're staring down the pipe of a 100% loss, or you targeted a 200% winner, but you see that 20% gain, and I just want to grab it, right? So I would say be careful and do your discovery/research first.
What would you say is the biggest misconception about the market?
Now that's a good question. I'm going to answer it two different ways. I'm going to say the opposite thing.
Okay.
It sounds like I'm saying the opposite things. One, it doesn't have to be near as complicated, as complex as you're led to believe.
Yes, I would agree.
As I think I've hopefully semi-demonstrated here, is it's not super, as I say, look for things breaking, right? It broke it on the upside. Hey, go long. Broke it on the, go short. It's not near as overwhelming as it seems to be. On the other side of that, I would say be careful what myths you're buying into. If anyone is ever touting to you that it's easy, just sign up right here for my, whatever run, because I promise you, trading is never easy, ever. We have some weeks where we did everything right and we look like geniuses. We have weeks where it's almost like the market is peeking right over your corner. And if anybody listening to this has been trading, you've been there. It's like the market knew exactly what you're doing. The market knew the best stock today was going to be Netflix because we had puts in it, right? So it's like, you have to, and we joked about it on the calls, like, why Netflix is up today? And everybody just says, because we have puts, right? So it's like sometimes the market's peaking right there. So there's a whole lot of, it's never, just remember, if you decide to get in the market, the hard part, we make things harder because we overcomplicate it. You don't have to. That part can be simple. The hard part is the emotional drains, the psychological, these things that really can wear you down. And you do have to come into it serious and as a business. And it's a lot harder, than the little pop-up ads in the YouTube channels would lead you to believe. So and the reason why I point that out is not to mock you, but just to remember, everything in the market is mindset. If you go into the market believing, because somebody said, if you go in the market thinking it's going to be easy, you're going to fail worse because you don't respect it. If you go into it knowing this is going to be hard and I could wake up tomorrow at 9:30 and lose half of my portfolio, you're going to start thinking a little bit more about what you're doing and how you're doing it.
What would you say was the biggest challenge you had to overcome as a trader when you started before you were consistent in your trading?
Absolutely. I get asked that question a lot, so I'll answer with the same three. It's just things that I learned. One, I always say the first thing I did when I started muting the TV. Okay. I always say, dude with suit and tie on CNBC doesn't know any more about where the market's going tomorrow than you do. Yeah. I know that sounds weird, but he doesn't. Okay. He knows why he believes it's going to do this. He doesn't know any more than you, right? So start muting. I've seen more bad trades than I know what to do with because of the news or the fundamental story or because of the company. Mute that stuff, right? Remember, the market already knows all that. So when I started muting the TV and focusing on trading what I see, not what I think, right? Number two, when I uncomplicate, I was that guy just like anybody anybody else. Back then, I had my Bollinger Bands, I had 3 moving averages, 3 momentum indicators, I had my candles, had all this stuff, and I was a disaster. And the worst part was I was never even looking at the number one indicator in the entire market, price, because I was looking at all this other regurgitations of price. So you don't have to do it my way, but I would say if you find yourself feeling like you're not in control and you're confused and you don't know what to do and you're doing worse, I would ask you, have you overcomplicated it? Last, circling back to the beginning, start respecting the power of good risk reward setups. Small losses, big winners trumps everything.
All right, Christian Tharp, CMT, thank you so much for joining me for this event today. I think it was a great conversation. For the T3 universe, the audience here, you'll be seeing more of Christian in the future. So it's kind of our introduction to who he is and who he is as a trader. Our next event will not be next week because of the holiday on Thursday. I know no one cares after the Wednesday close to hang out with me. So we will be back November 29th with a Bitcoin specialist. Or crypto specialist. So that'll be very interesting. Again, thank you, Christian, for doing this today. And I hope you have a great rest of your week trading.
Thank you so much, Greta. Have a great week.
You too.